Now let's move into our next session, wealth management and market opportunity. First, a quick shout out to our moderator, Wenzhe Zhao. As many of you may recall from the morning session, Wenzhe is our president-elect of TCFA, and he is also a columnist at Progressive Capital Management. Now let's welcome Wenzhe and all the panelists back to stage. Also, a quick reminder again, this is our refreshed WeChat QR code. This is the new QR code. If you don't have a chance to get into the morning sessions QR code WeChat group, this is a new one that we can get in.
All right. Okay. All right. Thank you for the introduction, Yanbo. And yeah, this session, we have the most number of panelists in all days program. And we have a combination of backgrounds of technology and finance. That's very unique in today's program too. So without further ado, let me just introduce our distinguished guests. From my left-hand side, that's Regis Dale, and he's a senior advisor of Bingyuan Capital. And Yuling Ma, she's the chief technology officer of FreeWheel, a Comcast company. That's one of the biggest broadcast company in the US. And Victor is the CEO of Sunjoy, and it's a NASDAQ-listed company specializing in video and social media. And then the next to Victor is Dan Ye. And Dan Ye is the CEO of Uniglobe Wealth. And she's a CEO of family office and a wealth management business that across the globe. And the further to my left is Nielsen. Nielsen is the CFO and COO of Prestige Wealth, another NASDAQ listed company that has global business. So let's begin our discussion. I think because of our diverse background, I want some of you to introduce your business, how your business is related to AI, and how kind of what's the new trend in your business. Maybe I will start with Yuling. Yuling, is that okay?
Yeah, sure. Thank you to having me. My name is Yuling Ma. I'm the CTO of FreeWheel. So what is FreeWheel? So I give you a brief introduction of FreeWheel, so then you understand why AI played a role in my company. So what we do is we're technology platforms to power media, especially video advertisement. So when you see a TV, for example, on a smart TV, with the, for example, what channel, like Peacock. So watching a movie. So who is power at the back to say, select the ads to play? So we are the one who is doing that. So our client has those media company like NBCU, who is the content provider, also a channel, or those like a Peacock, or even the TV provider like Samsung. And also the internet provider like Comcast. So because they are all the player in this advertisement field because the media. So how come the media company make money is because it come from the advertisement. And for the video part, we are the biggest technology provider on the market. And about 90% of the big media companies are our clients. So with that, so what is the challenge we have? There's many challenges with such a business. So for example, advertisement, the precision targeting is always something we want to talk about, especially in the internet time. Instead of broadcasting to everybody, precision targeting to say who is watching and watch what program, if we can have algorithm to guide the system to pick the right content in the right advertisement at the right time for those audience, this is the most efficient way to place the ads. So for the inventory owners like NBC, Comcast, they want be able to do the precision targeting because this is the most pricey slot they can sell if the precision is added into the advertisement. And for the other side, like the ad marketers, like Coke or BMW, they also want the precision targeting because this is the way they reach their audience, even pay a higher price, but reach the audience without waste. And for the end user like us, we're watching TV, we want to see the right content played. So this is really benefit for everybody involved in this ecosystem. But as a technology provider, what other challenges we have? It is, how to generate more revenue for our client. And this, we actually use, like precision targeting is use AI to power right now, which is traditional AI. And how to make more money? Because the internet way to play ads is always dynamic bidding for every time you watch TV, and in the commercial break, it's dynamic bidding. It's not like selected, it's dynamic. So this dynamic empower the precision targeting, but it has a huge technology challenge. What is the best price to win? What's supposed to play? So there is a AI power, what we call is bidding strategy during this process, because we need to make decision with millions in requests every second. We need to have a millisecond decision to make, but need to write them, use the right price to do bidding. So the bidding strategy is very important. It's not just the price, has considered everything together. So by doing this, we can empower our client make more money. And what others is for us, with such huge system, we have thousands of machines running on the same time on AWS, the cost is huge. Because every second, every day, we have about 50 billion requests coming in every day. And we need to generate the impression. Impression is the real ads play, who is viewing. So how can make our system more efficient? So we introduce AI, like machine learning algorithm, to really reduce the request volume to say, okay, what is the valid request coming in and what is the valid request we can send out? Most likely we can make money, our client can make money. So this efficiency gain is by playing, like machine learning and algorithm in the entire system to guide the system to run, because no human can really play any static strategy in the system to guide it. It's a millisecond decision and is powered by the machine learning algorithm today. So what else? There's multiple areas. So the troubleshooting, with such big system, how we troubleshoot, how can we know the system is running well or the system still has a huge problem? We actually introduced the machine learning model to monitor our traffic to see where is the abnormal traffic is supposed to be in certain pattern. One is violate such pattern, and then it's alert to us to look into this. So the troubleshooting, we actually also introduced the AI to power us. What more is, in the internet, there's a lot of bad actor on the internet, right? Internet is a wild world. For the advertisement, we charge by impression, which is one viewing, we call one impression. We charge by that. Our client charge by that, we also charge by that. But there is a lot of bad guys on the internet that try to use the bot to mimic a human being viewing a program, try to earn the money by doing that. So then we need to have a model and machine learning model to detect who they are, what is the bad traffic. If we see the bad traffic, we're going to eliminate it from our system. So because we are premium, our client are premium client, they're not just a very low-end content. So we will make sure the content quality is 99%, it's the real people watching, instead of, play the ads to the bots. Compared to the low end, it could be 50% our bots are watching, so they kind of very bad. In that situation, the per impression price is pretty low, but our client are premium clients, so we need to ensure with such a premium requirement, we cannot have those invalid traffic. The ratio is really, really low in our system. So this is more like use traditional AI and machine learning to power our system. So the common question right now is what is new, right? With the generative AI, it will bring a whole different ball game into us, which is not the traditional machine learning algorithm can do. So what is the new generative AI we can do? So it is quite new and it's very early stage. It's about a year old, but it's very early, in the industry to really adopt generative AI. So for me, personally, I asked my team is looking into two areas in the future recently. One is, what generative AI can do. I think one is really the knowledge management with the natural language as the interface. So for us, like there's attrition turnover in the company, right? The service people who has the knowledge can make the call with our client to answer the question. What if they left the company, and who can do that? We hire someone from, on the street, of course, but how much they know about our system and our knowledge. So that I think the generative AI can really build the knowledge base that with the human interface. One is to help the customer support to serve our client. Another is go further is can they help our client directly with complicated question and with the answer can generate by the system. So this is one area I'm looking into. And another one is how can we increase the productivity of the entire engineering team, which is use this generative AI to generate the code, generate the testing cases instead of have all the human being write all the code and the testing cases, which is boring, right? If we use the AI to generate the generic portion and only ask engineer to write the creative part, so that efficiency got improved, and also at the same time, we have a happy engineer. So I think I will stop here.
Okay, that's great. That's a very comprehensive overview of how you do business. Are you sure your company allows you to do that? Tell everything you are doing to the audience. That's fantastic. I think that lays the solid foundation for our following discussion. But also you answered a lot of my questions already. So maybe we'll move on to Victor and maybe just compress the answer a little bit, and we can have multiple rounds of discussions. But can you give us a quick view of your business?
Oh, sure. Actually, yeah, and first of all, thanks for the invitation to join this panel. And my company actually is not about like financing. Our company is a high-tech mobile application provider, and get a list in Nasdaq 2020, and ticker is SJ. I hope you guys can remember that. Yeah. Anyway, so like I said, our company is a mobile application provider, and we do provide a live streaming platform. We now have 6 live streaming platform, 5 in mainland China and 1 in Middle East. What's a live streaming platform? Actually, it's kind of like I think you guys all know TikTok, right? When you on a TikTok, you watch the short video. Also, you can see sometimes you will see the live streaming video, have a broadcast chat with or interact with the users. So let's let's say what we are doing. Let's call it live streaming. So we are the number one live streaming platform in China, based focusing on the entertainment side. That's our company, the business of our company. Yes.
That's awesome. SJ is
Yes,
the ticker.
yeah, SJ,
Yeah,
yeah.
sign joy.
Yes.
Cool. I think one theme comes up is the user experience that actually can be improved in a lot of businesses. I want to throw the discussion to our finance guys. Maybe from Nielsen, how can you see your company using AI? First of all, how's your company is running now, and what kind of user case scenarios you can imagine in using AI?
Okay. Hey guys, my name is Nelson, and then the company name is Prestige Wealth Inc. It's listed on Nasdaq this year in July, and then our ticker is PWM, which is pretty easy to remember, and then referring to private wealth management. We do asset management and wealth management in Hong Kong, based in Hong Kong and then US. We sell insurance products in Hong Kong and US, so we help clients to pick the best insurance products, and also we manage their wealth through external asset manager with a private bank in Hong Kong and in Singapore, and we also manage through a discretionary account. So our clients are ultra high net worth individuals, and mostly are Lisco chairman or the top management, and then some family offices. So the things like we can see currently the interest rate is pretty high, so the investment opportunity cost is high as well. So for AI, we're actually thinking about going to mass market rather than just focusing too much on the high net worth individuals. So we're happy to understand more about how we can do client acquisition through AI and at the lower cost, and as well as doing the risk management automatically, like a ChatGPT, to answer clients' questions online, and then to get more better solutions for them.
Cool. Yeah, customer services. I work for an insurance company. We use a lot of data to improve customer services, claims of accidents, and also the processing, the legal terms. There's a lot of data, and there's a lot of information that can use internally. Okay, cool. Let's move on to Regis. You want to share a little bit about your business and how AI is impacting it?
Yes. Hello, everyone. Thanks for coming out. Hi, can you hear me okay? Thanks, Wenjia. Yes, I'm Regis Dale. I'm a senior advisor for Binyuan Capital, a Chinese asset manager based in Shanghai. We invest in Chinese equities and have been doing so for about 11 years. We manage $1.2 billion in China right now. We have not actively started using AI on our research side or even on our marketing side, but those are the two areas that we see would most likely have the greatest impact on the kind of investing that we do. We are investing in companies in China, A-share companies, that have some pieces of the AI business, whether, all sorts of component makers, et cetera, mostly in the hardware side. But that's the extent of our involvement really with AI on the equity investing in China right now.
Okay, that's fine. If you're not using AI, you're not using AI. Yeah, I think the important part is whether you have the user case scenario for this problem. For me as an economist, I think it's extremely hard to use AI. This morning, our keynote speaker highlighted 3 important properties. One is you have a lot of data, you have a good algorithm, and you have computational power. Fundamental macroeconomic analysis doesn't have any of these 3. So I think a lot of investment actually share that property. And then, I I think hard about how to to do things smartly, in smart ways. And maybe this discussion will enlighten me more. Last not least, Dan Ye, I know you think a lot about investment as well, and you're very good at it. So can you share some of your experience investing or AI?
There's a lot of investors in the room. I definitely can't claim I'm the best. So hopefully this is going to be an interactive conversation either on the panel or after the panel. Again, thank you for TCFA's invitation. I've been a long-term friend and a huge fan. For those who know me, I used to work at BlackRock in an institutional sales role and went on to did an ed tech startup called Unicareer, where I to focus on career development for international talents, raised that company to Series C, had a partial exit, and then started my current firm, Uniglobe Capital, where I started off initially as a cross-border advisory focusing on China-based US dollar GPs with cross-border deals, but eventually morphed this into a family office, a multi-family office setup, where I focus on supporting and creating bespoke fund-of-fund allocation solutions for some of the wealthiest families out of Asia. So that's China, Hong Kong, Singapore, Indonesia, obviously all offshore capital, which is sitting in Hong Kong, Singapore, or Cayman. And most of my investment destinations are now in North America, with US and private markets being one of my primary focus. Talking about investment and capturing AI, obviously ChatGPT is a game changer, and everybody start noticing the trend of generative AI, but OpenAI, or as an idea of machine learning or computer vision, has been around for a long time. So you might see schools of thought as people just tapping into generative AI and almost using it as a marketing scheme, try to attract more interest, or you see people who have been deep in AI for the longest time and been through multiple generation or different waves of AI. I would definitely encourage everyone to look more to the latter as they have been monitoring the underpinning technology enablement before they make more long-term decisions. But we can invest in public equity if you are unsure about private investment or don't have access to some of the more exclusive deals. You can always capture the growth of AI through public investing. And we all know this year, the general public market was kind of driven by the big seven, NVIDIA, Microsoft, Google, et cetera, Facebook. Or you can think about investing in real estate like investment, for example, data center. In the last couple of years, a lot of people might have tapped into data center investment or even crypto mining that's kind of like data center. Some of my family offices have tapped into this. But now with different generation of GPU, different generation of computer power requirement, data center needs to be in an entire different shape and form. So there are real estate-like ways to invest in the growth of artificial intelligence. And finally, it's through venture. This year particularly, I've been visiting Silicon Valley quite a few times, as well as Boston, while representing the family offices from Asia. We talked to a lot of high-tech venture firms, given my focus is in private markets. And there's a lot of innovation in generative AI. And I firmly believe that it's going to impact all walks of life and all types of professions, fintech, financial services being part of it, but also gaming, healthcare, legal, basically everything. One quick example, how many of you know Otter.ai? Everybody know Eric Zoom, Eric Yuan, so the founder of Zoom. There's another up and coming Silicon Valley Asian American, Chinese American founder, and he started Otter.ai a few years ago. So all the large conferences, not sure about Wall Street, but if you go to any of the tech conferences, all the, for example, right now we're having a conversation now, and Otter.ai, if TCFA is using it, is gonna basically real time have all the script kind of on the side. So technologist vision is that you can let Otter.ai listen to all of your meetings. So think about all the meetings you're having with your boss, your managers, your counterparty, and Otter.ai is going to remember and read all of that meeting notes real time. So this is not from OpenAI. This is not public domain. This is your actual meeting, and he's going to document all that, and that's going to become your memory library. And think about someone else you're having a meeting with. This is kind of scary when you really think about the progression of artificial technology intelligence, because at the end of the day, you could be using your digital twin, like Otter.ai have analyzed your behaviors, your memories, your institutional intelligence, and then started talking to your counterpart who may also be using a digital twin, and you might be having this conversation online while you can be free to do anything else in your life. But nobody really knows the end state of AI. But I personally think the biggest opportunity is not just in software, but it's also in hardware, like the combination of AI as well as robotics, because robotics is not, it's going to combine some of the material science and hard tech. And today, I think the bigger challenge is how software and hard tech actually have conversation with each other. But I have so much to say about AI, but from an investment perspective, I think there's a lot of opportunities. And one last thing I want to add from a family office perspective, entrepreneurs like Yuling and Victor, as they're growing their business using AI or adopting AI from the next generation of wealth creation perspective, people like Nielsen and myself are also thinking about how better to serve people like them as they graduate or as they exit, whether or not to leverage AI tools or think about additional AI as investment. So that's another thing that's on top of our mind.
That's a fantastic extension of what the possibility will be in the future. I'm just not sure whether I'm talking to the real Danye or it's AI twin sister. Maybe next year she will have her twin sister to join us. So a couple of things. As I think we are running against the time now, but so many possibilities to talk about. I want to talk about the generative AI that comes up a lot in all of your remarks. I want to ask Yuling and Victor, is generative AI a really game changer from a technology perspective, from a user case perspective, or is it just too much hypes? Maybe Victor, go first.
Yeah, sure. Actually, I think AI, especially generative AI, definitely will be like game changer for our industry. I can take a live streaming industry as an example. Actually, before I maybe one user on a live streaming platform, the user can chat or interact with the broadcaster or chat with other users. So all of them know what they chat with or interact with a real person, right? It's a human. But I think in the foreseeable future, and generative AI will change the game, and also the online social relationship will be changed totally. We can imagine that in the future, and the user could be an avatar. It's not a real person. Actually, that's what we are now working on it. And we are working on two sides. One side is for the digital broadcasters. And so when user log on live streaming, it's not talking about not chat with or interact with a real person, it's interact with digital broadcasters. So in this, from this point of view, kind of like many interesting or attractive content will be generated by generative AI. Another side, user can be an avatar, right? So it's a digital user. So each digital user is also based on the generative AI. So every user can create his own personalized avatar based on generative AI, this AI will be, this digital user will be smart enough and kind of like a real person can be shared with other users and even other avatars. So kind of like I think it's kind of like a relationship of kind of a revolution of the social relationship. So that's, I think, definitely is change our industry with generative AI.
It sounds like the model that it can change how we interact. And sounds like our future TCFA annual conferences will have avatars doing all the job.
Yeah, exactly.
And I just sleep. Yeah?
Yeah.
Okay, sounds great.
But Yuling's software tries to weed those kind of avatars out, right?
Yeah, so what do you think, Yuling?
Yeah, I agree with what Victor said. AI, generative AI is a game changer. And I think Daniel also mentioned a lot of opportunities so far, on the market. So is AI a hype? Your question is? I think it is a hype right now, but there is a reason behind why the hype is there, because with the huge potential. And so that's why I think the hype is there. But how, which company will win? Nobody knows, it is very early at this stage. But, if you're looking at this as an ecosystem, so it is very complicated ecosystem. So there is someone power the fundamental technology for this generative AI. These are big companies, right? Those Microsoft, OpenAI, Google, Meta, and these are very, very fundamental. They power the generative AI for the future. But on top of that, there's also a bunch of people and a small company to power on top of it to see what is the tools I can provide on top of them so that for the AI adoption, make it easy and safe. So the security is a concern. Do you solve the AI security issue? Do you power them to say easy adopt the fundamental models? These are really infrastructure opportunities for the company to really say, okay, what is the value I can provide? And on top of that, on the application layer, I think there's a huge opportunity in everywhere, like the legal, healthcare, even for our company, customer service. And also, I think there's a lot of things will happen that we don't know today, which is I heard a investor come to my company really talk about AI, but what they talk about is really very interesting, unique situation that the application that they can generate an agent as a small knowledge agent that they really accumulate the knowledge and with the prompt so that it become a public prompt and everybody can use. Then that's become an open market for the prompt agent to run and then become like social media, you're influencer, right? You can be a prompt influencer on such platform to help people to get the knowledge. So I think there's lots of opportunities on the market. We don't know. But the key is you need to provide the value for the human being. You have a better life so that people can adopt it. And because of that, you have a market value. And because of that, there's an infrastructure provider, there are technology provider to support that. So overall, I think the generative AI has a huge future. It will change fundamentally to the society, to the technology, to the product design in the future. It's just still early today. People don't know, what exactly which, application will win and what infrastructure provided really got adopted. So it's early stage. That's a lot of opportunity. That is the reason.
Cool. So it sounds like we also need to find the realistic application scenarios. We need to make sure you have value to add in that scenario.
Yeah, I think you can play in all these layers. It
Yeah.
depends on, what is your strength.
Mm.
If you understand, the fundamental model, you can improve that. Or what is the pain in the technology field to adopt AI, and then you actually can create a company to do that. Or you understand a particular use case that you know where the pain is and how can you make the people's life easier. And then that's all the opportunity. I think the technology is a tool.
Yeah.
The opportunity is the key.
Yeah. I heard some famous data scientist describing what his job is. Being a data scientist is you are actually a business person, which means you understand what questions you are asking, why you are asking these questions, what's the commercial value. The second is that you are a data manager. You know where to get the data, what kind of data it is, how you clean it. And also you are a computer scientist. So you have the algorithm you have the code, you have the tools to combine the business user case and using big data to answer that. So you understanding the fundamentals and intuitions and the use case is absolutely key. And one thing that comes to my mind, being a macroeconomist looking at the US and China all the time for the past 13 years. Imagine that. And one thing that struck me is the fundamental ways of the markets functioning are very different on these on either sides of the Pacific Ocean. There were different ways of investors invest, and there are different ways markets behave. And when I think about AI, this example always comes to my mind. And because of TCFA is a bridge that tries to bridge US-China, I think that's an opportunity for Regis to talk about the differences between US stock market and the investor preferences, characteristics, versus a Chinese stock market, how it behaves differently, and how the characteristics differ.
Well, I've been involved with China's markets from the early 90s, so about 30 years now. And so I've noticed significant differences between the two markets and the way asset managers in both markets operate. I would say, and I've seen that from the institutional investor point of view here in the US. A key difference between the US and China markets is that it's very interesting to me to see how Chinese asset managers say that they are long-term investors in China. They learned to say that in business from the courses they took in business school, and they're told to say that actually by their lawyers as they write their prospectuses for the mutual funds that they're listing. But in my experience, Asian generally and Chinese asset managers specifically invest for a very short period of time. So I worked at Harvest Fund Management for a while, and the turnover for most of their funds was over 1,000%, which means that they would turn over their portfolio 10 times in a year. So how can you say you're a long-term investor if every 6 weeks you're turning over your portfolio? Another example is that the asset managers in China really have, for reasons that are peculiar to the market, don't develop large funds. So for Harvest, the largest mutual fund that they had was only about $1 billion US. And whereas here in the US, you can have mutual funds that are 10, 20, $30 billion or more. Even 30 years ago, the Magellan Fund from Fidelity had reached $50 billion. So There are very interesting long-term differences between the two markets that are making it more difficult for US institutional investors to invest in the China market.
That's fair. I think probably that type of market differences is the key to drive a lot of recent investor behaviors. I think, we talked about that in this morning session, talked about this, the previous session is now US interest rate is going up. Out of sudden, the bond investors and cash investors become so vigilant, right? They become so robust in this market scenario. And in equities, it's biggest the 7 companies, and the theme of AI and diabetes, weight-losing drug is the only 2 kind of themes this year. So I want to throw the question back to Nielsen and Danielle, is how do you take advantage of the 2 different markets and different investor bases? How do you take advantage of the US versus China market difference?
I actually really want to resonate what Regis just pointed out. The notion of long term is not uncommon when we're dealing with cross-cultural communications where different parties might be using the same term, same phrase, but we might be referring to 2 very different things. When a US institutional quality investor talking about long term, they're thinking about 10 years plus, at least like 5-8 years. And in a lot of Asian investors' mind, it's probably 3 plus and maximum 5, and sometimes even like 1 to 3. So for anyone who's doing cross-border business, that has been my whole career passion. I'm very mindful about those differences, and that is a concept that I constantly need to navigate. But in terms of talking about opportunities as well as challenges, I guess I want to highlight the differences between Asian family offices and I guess institutional quality family offices or wealth platforms we're seeing in the US. And I want to categorize 3 differences. One is a notion of long-term and short-term difference, and that is also highlighted by how people set up teams, how we define institutional quality. Regis also pointed out in the US, there's a lot of mega firms that over decades of accumulation, they have different generation of leadership, and they have really proved to accumulate their wealth over different market cycles. And in China, you may have different emerging leaders and different players in different market cycles, different political regimes. And as your generation change, they may not necessarily think about succession plan or how to really build in institutional quality. A lot of times we still have to deal with, in Chinese term, 一言堂, like whoever is the founder of the firm still own the ultimate decision. But in the US, you see a very different dynamic. And I think that may be the root of how people think about short-term versus long-term. But as the society get more mature and as Asian investors, the families I deal with coming to allocate to the US, they have to think about things in more long-term because the US and the most Western markets are much more mature, sophisticated, and with a wealth of products. So you can't really navigate things with a short-term mindset anymore. So that has been an education process I'm sure Nielsen and I has been dealing with. And the second point I want to mention is the diversity of asset class. So the families I deal with are typically either their wealth accumulation are through traditional manufacturing or real estate or high tech, so the internet wave, right? And for all those 3 types, when they think about asset class and how they have accumulated their own wealth in China or rest of Asia, they think about public equity, they think about real estate, and they think about venture capital. And anything else is probably neglectable. So when they come to the US and they think about the wealth of product types, different asset class, either it's just like they don't even understand or it's just not relevant, which is why from a asset allocation perspective, as I work with these family offices who are trying to have a more longer term, sophisticated institutional quality approach, we need to almost educate them on different asset classes and asset allocation approach, similar to a yield endowment model, but it takes time. So for anyone dealing with Asian high net worth, maybe the easiest is to capture those three markets as I highlighted because they've seen the wealth creation in those three. But longer term, you need to think much more broadly in the Western market. And the final thing I want to mention, which is where generative AI can play a role, is about trust. So the US market is very professional driven. So even for family offices, if you think about Willett Advisor, for example, Michael Bloomberg's family office, over $1 billion, and their entire team are hired from investment bank, private equity, hedge funds, some of the top-notch Ivy Leaguers. But when it comes to Asian family offices, it's not uncommon that they have a family office member who has nothing to do with investment manning the whole team, and they may hire someone they trust from other businesses, but not necessarily an investment professional. That landscape is changing, and I was thinking that with maybe generative AI taking part of some of the servicing dynamics, you can probably create trust on a different level where you can actually focus on real trust and building that institutional quality trust with people who have been there, done that, who actually have the professional training. So I think it is a very encouraging landscape for anyone reading the data. Singapore 2023 alone had about 700 single-family offices. That's 7 times of growth from about 3.5 years ago. So wealth from Asia is definitely someone everybody is eyeing on, but how we can better capture that and how we can bridge the gap, I think it's a time to shine for people like us in the room who are actually trained mostly in the US and have that professional and institutional quality mindset.
Yeah, hi. Actually, I have a couple of points, just follow Danya's point of view. Actually, it's quite similar. I've seen clients in Asia. The first thing is like they do well in their own industry, but then they believe they are good in finance as well. So sometimes we see clients who are in the manufacturing or real estate industry, and they try to master their financing industry as well as they don't believe the private bankers to do their work. Maybe the reason there are a couple of different reasons. One of the reasons is like in China, there's a lot of sales people who are more they're commission driven rather than just on the performance driven. So they like to sell things with a high commission rate. So basically their PE, sometimes even a discretion account, they make very quick turnovers for their clients. So that's where their commission is coming from. And then for Chinese investors, they are more speculative on the policies and then rumors, and then also the industry tips. Yeah, that's why we see. That's why one of the reasons we're just saying about people are doing a lot of turnovers. And then I see the U.S. and people are long term because they believe on the fundamental side more. Yeah, I think that's more the reason why there's a big culture difference from different investors.
Yeah, sounds like fast money in the US is like slow money in China. It's different time scale. It's like, okay, I think our time is up. Thank every panelist for the eye-opening and distinguished remarks. And please give a round of applause to them. And yeah, thanks for staying with us.
Thanks to the panelists for the inside discussions. As many panelists mentioned, sorry.